Now, usually at the IBSL, what we have is physical class, and since we are in a new environment, new normal environment, now we had to have to basically go online for our courses. Now I can see a lot of you have joined, more than I think 100, the maximum have joined at the moment, and people who are unable to connect at this moment, they can watch the videos later on I think you in the form of YouTube videos, and you will be able to if anything is not clear, you can have it later and do some revision as well. That's a good thing. So in the physical class, there's no recording, and whatever I say, that's it. You have to take your notes and you have to follow. But online mode, good thing is you can basically log into this, and also you can sleep if you want, and you can listen later. It's a good thing. But what I expect in this class, you basically have some interaction with me, because in most of the cases I post questions online, and I request some free feedback from you. I want to hear from you as well, because it should be a two-way process. I deliver. I need to know whether you absorb the content, and also I need to know whether you understand it, and I need to get your feedback as well. And especially, I need to know whether you have some knowledge into that area, whether you have some extra knowledge into that area. That would be helpful. Uh, Usually, I think our session, the survey of financial system, is up online during the session 3 to 5 on Saturdays. But this month we are having some shift due to some other pre-commitment of mine. So although we have this session at 1 to 3 session now, time period now slot, later we will shift to 3 to 5 session. Okay. So this is a survey of financial system, as you are aware, the subject. And in this session, this particular session, we are having some introduction to the financial system. And we will have some overview about the financial system. Now, I'm the resource person, the lecturer for this course for entire 3 months, 3+ months. So whether you like it or not, we have to, you have to, bear with me as the lecturer. My name is Anil Pereira, and I'm an additional director of the central bank, especially working in the domestic operations department. Domestic operations department is basically responsible for implementing monetary policy through the financial markets, especially the banking sector. So I'm very much connected with the banking sector, and also with the financial market, particular segments like the money market. So that is my day-to-day life in terms of the employment. And before the present department, I was working with the uh, economic research department. Again, another important department related to the uh, financial system and also broader economy, where we formulate policies for the betterment of the economy, especially monetary policy. And we look at broader markets in a broader sense, to get some feel about the market. So I was fortunate to work in this research department and also in the domestic operations department. Now, why I'm saying this, I got some experience in these financial markets and the banking sector. So I'm confident that I can basically uh, give you some thorough knowledge on the market mechanisms on the financial system in Sri Lanka. And with that, I think we will be able to share some of the experiences of mine in relation to the markets and the financial system that will also be helpful in our discussion. And also, I was the resource person for this particular subject at IBSL since 2014. So this is my roughly the seventh year I'm completing in this lecture cycle. So 7 into 2 cycles per year, roughly I have taught in 14 cycles in this subject, and also in the previous syllabus and also in the new syllabus. So I think with that I have some reasonable background to discuss this subject or teach this subject to the students. So our subject, the title, I01, Survey of Financial System. So this is a compulsory subject in the course. As you know, you are starting with this IABF course, Intermediate in Applied Banking and Finance, and then you will move to the second level, DBA. So we are at the starting point. So at the starting point, intermediate level, we have 4 compulsory subjects, uh, including commercial banking, business accounting, introduction to banking and finance law. And among these other subjects, survey of financial system is also a compulsory subject. So you have to complete this subject uh, if you want to pass the exam. So there are some additional subjects as well, but I'm just talking about the compulsory. So this is one of the compulsory subjects. Now, what we are doing in under this subject is basically we look at the financial system as a whole. And financial system is a kind of some mechanism that facilitates the economic activities in an economy. Give me a minute. So I was telling about the financial system that facilitates the economic activities by providing services of money. And we know any economy in modern world will not function without a financial system. So economic activities are needed because our day-to-day activities are linked to the economy. So whatever we do, it is linked to the broader economy. So every action of us is linked to the economy, and especially we know those economic activities can be categorized in certain ways, like the agricultural activities, industrial activities, or services activities. Likewise, some broader categorization. So whatever we do, as let's say we are employed somewhere, so our employment is related to these economic activity. So the production activity in the economy is handled by the economic activity. So it is generated by the economic activity. Sometimes you call it the real sector, real economy. So the real economy, you have this goods and services production as well as the factors of production in place. Goods and services, as I said, the product output that we produce, the agricultural output, industrial output, services output. Likewise, this output is broadly we refer as the goods and services. So these goods and services as well as factors. Factors means what we employ for the purpose of uh, uh, creating this output. Now, these factors we call them as inputs for the production. For example, the land, the labor, capital, entrepreneurship. I think in your high levels, if you have done business studies or economics, you may have studied. There are 4 major factors of production. Out of these, the 2 are very important, labor and capital, L and K. So these are also part of the real economy. So this real economic activity cannot be functioned or cannot perform the real economy without the financial system. So financial system is facilitating the real economic activity. For example, now let's say you may do a production, some you do some manufacturing. Let's say you produce, let's say these days, a mask, right? Where people wear masks. So you do a manu- some manufacturing plant of mask. So how do you take this mask to the the broad economy? How can you exchange these or sell these masks in the economy? You have to have the transactions in place. Transactions are taking place based on money or finance. So the finance flows or the monetary flows are helping you to do the transaction. You give a mask and in return you get money, or in return you get a check, or in return you get any other financial instrument. So these financial instruments or flows are helping you to perform the real economic activity. So there is a clear link. So some people say the real economy is backed by the financial sector. Or some people also say the financial sector or the system is the blood of the uh, economy. Why? If you say the real economy has the organs of a body, those organs will function because only because of uh, the blood. The blood is the financial. So blood circulation is needed for the functionality of the body. Similarly, this financial system is the circulating mechanism for the real economy to work. So when there is a clear good link between those two sectors, the real sector and the financial sector, the overall economic performance of the country would improve. So that is the uh, important importance of this financial sector. Now, in this subject, what we are doing is we are trying to understand the link between the operational mechanism of the financial system, or the aspects of the financial system, different aspects of the financial system. So this subject is named as the survey of the financial system. Survey means we are just surveying the entire financial system to get some holistic understanding or broad understanding about the financial system. So when you have this broad understanding, especially the components of the financial system, how they work, the operational aspect, that will help us to uh, understand the entire financial system. Or if you just look at each and every component of the financial system uh, in a deep manner, that will help you to understand the entire financial system, and that its link with the broader economy. So in this subject, what we are doing is simply we try to understand the uh, operational mechanism of the financial system. So why do we need it? Uh, because if you understand the broad operational structure of the financial system in the economy, as the professionals of the banking and finance area, I think why you have opted to do this course, the IBSL program, because you want to become finance or banking professionals in the country. Maybe not in Sri Lanka. You want to work elsewhere in the world. So today we are in a globalized world. You can work anywhere in this global setup, and you can be a financial professional within Sri Lanka or in any other continent or a country And to do or to work like that, you have to have a thorough understanding about the financial system. And also that will help you to specialize in certain areas, right, in your career. So in the financial system, we know there are various people working in different areas. There are bankers, there are, valuers, there are investment professionals, there are fund managers, there are insurance brokers, actuarian, people. Likewise, there are various areas that you can, work in the financial system. So that specialization will happen when you have some broad understanding about the financial system. So in this subject, we actually lay the basis for the broad platform for your future knowledge, right? So your future knowledge and your broad understanding will be dependent on this knowledge that we impart through this subject, the survey of financial system. So this is our recommended areas, the subject coverage. Very quickly, I just glanced through the areas at the beginning, because then you will know what would be our scope in this subject. And when you have some understanding about the scope of the subject, you can do some, your own work related to the subject. For example, you can do some readings. You can refer to some other materials. You can simply, be aware of the financial sector. You can, interact with the people in these relevant areas. So that's the usage for the importance of having some understanding about the subject coverage. So the subject coverage, we are talking about this as the start, the role of the financial system in the economy. So we will do it today. We start with that discussion. Then we will look at some important topic on money. Money is the basis for the financial system. The financial system is built upon the concept and the usage of money. So we will look at various uh, aspects of money, evolution, function, money printing, money supply, demand, and also some new forms of money. In modern world, there are new areas of money, like, these, I hope you have heard the term Bitcoins. So Bitcoins are, not physical money, they are digital money. So we are talking about digital money in the modern world. So we will be looking at those aspects as well. Then we will look at other components of the financial system, like the payment and settlement systems. So in the payment system, there are various methods of doing payments or making settlements or do some clearing of transaction. So we will look at those aspects. And then the financial markets and securities. In the financial system, there are various markets. I will have some brief discussion today on this in this overview about these topics. And there are various instruments that we use in a financial market, because we cannot do a transaction in a financial market without having instruments. So instrument is the mode to do the transaction. So we will look at those transactions or those instruments in detail under this subject. And then financial institutions. Financial institutions means basically the players in the financial system who are basically acting in the financial markets, like the banks, non-banks, other entities, similar entities. And then we will look at financial system stability, basically uh, the the crisis and the frameworks that we use for financial system stability. Stability means the financial system operates without any problem issue. Uh, we have to have a very sound financial system without having any failures. Failing financial institutions or market is harmful. Now, I think I don't need to say. Let's say if a particular bank is collapsing, or if it is going bankrupt, we know how hard for the customers or the depositors. We have experience even in our country for such failures, not in banks but in some other financial institutions. So we have to have a very sound financial system. We will look at those aspects as well. And then we will also look at the financial safety nets, which means what are the mechanisms to support the financial system stability. Now, safety net is a kind of a protection. So we will look at these protection mechanisms as well. And then in this subject, I recommend some of the readings, some particular readings, while we have some discussion going forward in the next 3-4 months. I will request you to look at certain, references, and I'm listing out these references in this slide. Maybe sometimes the particular book, maybe sometimes particular chapters in these references. Now I have basically listed 5 references here. The first 2 are the local books. One is a survey of financial system, English book, and also the Sinhala book Mudal Ganadenu Bankusa Arthike. Both were written by uh, uh, Mr. Samarasiri, former deputy governor, and he was basically the former chairman of the IBSL. Those 2 books, I think, give some understanding about the subject. And then one international reference in financial markets and institutions, Mishkins and Eakins is a very famous book. Probably some of you may have already referred to this book. You don't need to buy this. I'm only referring to certain chapters. I think soft copies of this book of this book is available on the website. So first 2 books are not available in soft form. Those are those can be accessed in libraries, but the English book, the international book, can be accessed on the internet. The soft copy, maybe the current, not the current version, but some previous versions are available. Then the 2 publications of the central bank, the annual report and the financial system stability review. Both are published by the Central Bank of Sri Lanka every year annually, and that is available on the central bank website. You can basically download chapter by chapter. I'm only referring to few chapters, not all. Mostly in the annual report, chapter 7 and 8, and in the financial system stability, it's a small report, the entire report, because we need to have some understanding about the local developments, local structure of the financial systems, things like that. We have to have some understanding. So for that matter, I'm basically suggesting these readings time to time, and you are expected to refer to these readings or these books or the book chapters time to time, because that will give you some additional understanding. Now that's the overview of the subject. Now overall, the subject appears some fundamental subject. Fundamental means you need to have a holistic view, some helicopter view on the financial system. To have that, this subject is helpful because we are touching all aspects of the financial system. In the next subjects or in the next levels, you will be studying each and every aspect in detail. For example, in this subject, we are talking about commercial banking very briefly, but you have a separate subject for commercial banking. In this subject, we are talking about monetary policy, money, very briefly, but there is a separate subject for central banking and monetary policy in the next level. So likewise, you have different specialized subjects going forward. So this is providing you the basis. So in that sense, some might think, or you might think, looking at the syllabus, by looking at the syllabus, this shouldn't be a very difficult subject, right? Of course, it's not a difficult subject. Everything what we discuss is, very standard knowledge. It is available everywhere. Even if you read a book, you can get some understanding. But the issue is, most of you don't get these principles right. So as a result, we see this subject is a subject with highest number of failures, right? So fail rate is, or the uh, performance in the exam is not that good. We see large amount of students are failing this basic subject, core subject. So keep that in mind at the beginning. So you have to make it very clear that you are very closely following what we discuss. You have a thorough understanding on the matters we discuss. So with that, before I go to the next levels, probably I'll give you some few minutes if anyone wants to, raise any concern or you want to ask any question, get some clarification before we move forward. So it's time for, have some, feedback. So I'll give you a few minutes if you want to raise an issue. Any more questions? So in the class, the structure, I think if we are meeting physically, I don't know whether at some point we will be able to meet in a physical classroom setup. We are having, some workshops in between. Workshops means to discuss some model questions, to discuss some past papers, to have some tutorials, and also to do a model paper. We have some workshops, especially towards the end of the course. So let's see whether we are, able to have these workshops going forward. Okay. Otherwise, if not, we will have some, some online mechanism for get some, continuous uh, feedback or continuous, revision to the materials that we cover. Okay. Any other questions?
Excuse me,
Not
sir.
any? Yes.
What will be the duration of the first level?
First level in the duration in the sense?
Like when we have the exams?
Normally now under this new setup, I'm not so sure when would be the exam dates. Now usually when we start this cycle, the first cycle in the year, normally we have exams in March, right? Now I think this time we are a bit late. So our cycle starts usually in October, then we will go for lectures for 3.5 months to 4 months, so roughly. We have something like 14 to 15 sessions weeks. So which means roughly 3.5 or 4 months. And then a study leave period, and then you have exams starting in late February and March. That is the usual setup. So this time I think we are a bit late now. It's almost December, so which means probably we might have exams maybe after April. And also, mind you, there is an exam cycle going in January, if I'm not mistaken, because for the previous cycle, we couldn't have the exam because of the COVID issue. So exams were not held for the previous cycle. So that exam will be, I think, will held in January. But after that, I think the best case scenario would be after April, maybe April or after, because at least we have to have 3.5 months to cover our discussion. Clear?
Yes, sir.
Thank you. Any more questions? I think,
Hello, sir.
yes.
Yeah, I just wanted to say something. I was
Mhm.
able to log into the meeting just now only because I had
Mhm.
some few issues with my device. So I
Okay.
just wanted to know what are the things that we discuss, if you don't mind. Because
Things
I
what we,
just
yeah, no issue. The things what we discussed was basically the why we study this subject, and also
okay.
I looked at some of the subject coverage, right? The syllabus.
Uh-huh.
So slides are available with you. You can, I think, download and go back and see the basic coverage of this subject. And starting from the, the overview of the subject, we will be covering different aspects of the financial system, financial institutions, markets, infrastructure, things like that. Okay. And then I also mentioned some of the references that we need to follow, books, right? So those are also available on the slides. I mentioned few books and reports. And later on, someone asked the question of the structure of the paper. Then I said the question paper will have eight questions. The first one will be compulsory, and you have to write four more questions, altogether five questions. Every question will carry equal marks. So that was the basic, discussion that I had.
Excuse me, sir.
Okay, sir. Thank you.
Okay. And if you
Excuse
need
me,
to
sir.
have some, some more details, please refer to the video. I think it's available. Okay.
Excuse me, sir.
Sure.
Yes.
You mentioned some books from previously,
Mm-hmm.
and which website we can refer them?
Which? I didn't hear the questions properly. What did you ask?
You mentioned some books from previously, and
Yes.
what website can be refer them?
Website.
Yes.
All right. Now I mentioned, I think, five books. Books in the sense references. The first two, I mentioned two books: Survey of Financial System book, and also Mudal Ha Banku Arthike, Sinhala book. So those are not available as, soft versions. You can access through a library. So in a library, you will find it. And then I mentioned an English book, uh, Mishkin's Financial Markets and Institutions. That book, I think, if you simply Google the PDF copy of that book, it's available online, right? Not be the current version, but some previous version is available. But I'm only using some of the chapters of these books, so you don't need to buy them, right? You never buy. I'm just referring to some of the chapters. And the last two things I mentioned, central bank reports, right? They are available in the central bank website. I'll share the central bank website here on the chat box, right? So if you simply uh, do you see the chat box?
Yes, sir.
Okay. If you go to the central bank website, there you have these reports under publications, right? Under publications, what I mentioned was the annual report and the financial system stability report. Those two are available in soft form. Again, I'm only using particular chapters of those reports. So I'll mention to you, I will mention to you what are the chapters that we will need. Okay.
Thank you, sir.
Okay. Another question from the chat box. What is the pass mark in the exam? The pass mark in the exam is 45, right? So you have to score at least 45 to get the to pass the exam, to get S mark, right? And then someone asks, do we receive any tudes or should we print ourselves? Now, what I am doing is basically I'm giving you slides every week. Okay? Have you noticed? I think those slides are available on your LMS. Okay, so I'm giving you the slides. Then this year onwards, for certain topics, we are giving you a brief note as well. The reason is, since we are not meeting physically, personally, in the classroom setup, just meeting virtually, we thought of giving some additional support to you. So we are basically giving you some notes very briefly. Have you received that as well? It's available on your LMS notes, a PDF note. Yes. So those two are the available resources. Now it's up to you whether you print it or you use it from the computer. I can't say anything on that because I don't think you need to print it. But if you simply download it to your machine and you keep it, or sometimes in a PDF copy you can make notes, right? You can use that way. If it was a physical class, yes, definitely we will give you printed notes in the class. But since we are not meeting physically, you have to have your own arrangement. And the other thing in the discussion, I mentioned, what is, more than the available content in the slides. So slides are only a guide. It does not, include everything. So when you listen to the discussion only, you get the, clear understanding about the slide. So sometimes in some sessions, I'm only using your 2 or 3 slides for the entire 2 hours. So during that period, I'll be, giving you some additional discussions for having additional discussions based on those slides. Maybe some calculations, maybe some additional, information. So for that matter, you have to have your own notes. So be prepared whenever you log into the class. You have to have a notes book. You have to take your own notes. Okay. Otherwise, you will be only limited to the slide. Whenever you study the exam, you are only having slides, means you are not having enough materials. So you have to have some your own notes. That is the setup. Clear? Any other questions? Since this is the opening session, we can spend some time on clearing your issues. Can you see the slides? When and where the recordings are being uploaded? I think in 2-3 days, probably I think by Wednesday, because they do some editing and all that. So after that only this recordings will be uploaded. How we get those notes? I think it's available on your LMS, right? In this Google, in your account, the notes are available, isn't it? Some people have responded saying they are already having the notes, which means they should be available on your Moodle. So it's in the Google Classroom actually. Oshadas, thank you, Google Classroom. Yeah. So please check on your Google Classroom in your account. it should be available. Every week under the subject name, you have notes uploaded. Any more issues? Right. There's another question. Only 100 participants can join this session. Yes, we noticed it today. I think in the morning sessions also, I was informed only 100 participants are allowed to join the classroom. As far as I heard from the IBSL, it will be resolved. I am not so sure. I cannot give you a perfect answer on that. I think they are working on that. So probably by next week there will be some solution to the live classroom people. So which means we are fully subscribed, right? Fully booked. But the good thing is if you miss the class lively, the session is available in the video form. So even if you listen to the video later, I think that won't be a big disadvantage. But only thing is when we do some online activities like we do some calculations and all that, then I think having interaction is really important. So let's see what happens by next week. I hope it will be resolved. Okay, I think this is the first time we have reached this 100 limit online. Usually in the previous session we have never reached this 100. We have a lot of students registered, but sometimes they log in later. So likewise, this is the first time I think we are encountering this problem. But that will be addressed, I guess. Right. Any more questions? Right. So shall we move to the discussion today? Subject matter. Ready? Okay. Now I'll go back to the slides. Can you see the slides?
Yes.
Okay. Now in this session, we are having some overview or some overall discussion on the financial system. Overall discussion in the sense, I'll be looking at various aspects of the financial system, and going forward, we will be covering or we will be discussing these things in detail, right? So to start with, we are just looking at a system. So what do you mean by a system? Right? System, by definition, it's a set of things working together as parts of a mechanism or in an interconnecting network. So in a system, we have different things or set of things in a system. And to name it as a system, those should work together, right? So there should be an interconnection. Now our body is a system, isn't it? How does the body work? There are various organs, different parts of the body, and they should work together. Otherwise, the system will fail. For example, let's say in your body, your lungs fail for a reason. So if the lungs are failing, system doesn't work. Why? One particular component is not working together. So in order to system to work properly, they should be working together or in an interconnected way. So that is the definition of a system. So the best system we know, I think, a computer system, right? I took an example of our own body, but if you look at the computer system, that is a very valid or very convincing example. Now, in a computer system, we know it doesn't work if you don't have these basic requirements. For example, at least to work, computer system to work, there should be a CPU, there should be a monitor, there should be a keyboard, mouse. Things should be there. Those things should be there. So let's say if you don't have a such a system, even in a laptop, you have a system, right? You have a screen, you have the touchpad, the 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 CPU is inbuilt to the laptop. So likewise, you have different parts. If one part is failing, one of these things are failing, this computer system will not work. So as I said, a system has different parts and they should work together. Now apply this concept as it is to a financial system. So in a financial system, what we have, if you closely look at the financial system, there you have a set of components. As I said, there is a set of components in the financial system. Set of components. Different segments are there. Elements are there in the financial system. So if we have any one component in the financial sector, you cannot call it as a system. To name it as a financial system, you should have different components. And through these components and through the actions of financial intermediaries and others related institutions, you create and exchange financial assets, right? So by forming different components, you create a system. In this system, you exchange financial assets. Now, let's move to more, this is some broad idea, more academic explanation of the financial system. So here I'm, taking a textbook definition first, defining a financial system. A financial system is identified as a set of markets for financial instruments and the individuals and institutions who trade in those markets. Now, what I have mentioned, a set of markets of financial instruments, individuals and institutions. So these are the components that I have mentioned, right? These are the components that I have mentioned. What are the components? There are markets, instruments, individuals, institutions. Not only that, regulators and supervisors are also there. They are also a part of the financial system. Okay? So those are the different components. And I told you, by bringing those different components together, we create a financial system for the purpose of create and exchange financial products. So in this definition, we have this word trade. So trade means we are basically exchanging financial assets. So in this definition, a textbook definition from Howells and Bain, we can understand a financial system as a set of markets, instruments, institutions, regulators, supervisors who are basically supporting to trade financial assets, right? So in that sense, the financial system is an institutional arrangement, right? You call it an institutional arrangement. Why you call it institutional arrangement? There are proper structures and mechanisms in this financial system for purpose of mobilizing funds from surplus units and channel funds to the deficit units, right? So this is the basic mechanism of the financial system. Now here I would like to spend some time, right? Now in the economy we know, as economic agents, as I said, in the real economy we do a production. We engage in economic activities by mobilizing factors of production, the land, labor, capital, things like that you mobilize, and you put it into the production process, and through that production process and by inputting, materials, you generate an output. This output in the economy, if you have done economics, you might recall, you call it Y, right? Y. So usually this output we call it as Y because it is the entire output in the economy that is equal to the total income of the economy, right? Total income of the economy. And also in national accounting, we think this is equal to the total expenditure in the economy, right? So this thing, we call it as the national accounting identity, right? National accounting identity. Why you call it as an identity? The total production in the economy is viewed or can be looked at from various angles. Y means the production approach, I means the income approach, E means the expenditure approach. So in the economy, we assume these things should be equal, right? To economy, in order to economy to be considered as an equilibrium. Okay. Now we also assume, let's say we pull out this Y, right? Y is utilized in the economy. Y means simply the output or the income is used in the economy. Give me a minute, please. Hello. Okay. Used in the economy for two purposes, basic purposes. What are these two purposes? First thing, you consume, right? When you have your income, you basically consume. Let's say when you have your monthly income, you consume. That is basically, as I said, a reflection of the output. And sometimes you consume the entirety, sometimes you consume less than your income. So if you consume the entirety, your income equals the consumption, right? But usually rational economic behavior, a person with rational economic behavior, he would have some balance without consuming. You call it savings, S, right? So savings are the unconsumed part. I think every one of you, if you are working or if you are receiving some income from somewhere, maybe from parents, you have this equation with you. Partly you consume, partly you save. So these savings, this is a scenario of an individual. If these savings are accumulated in the economy, you can call it the total savings in the economy. Okay? You call it total savings in the economy. So that is a surplus. Now, there could be some instances, here we considered a situation where you have positive savings, right? There could be some people, their consumption is greater than income. So if their consumption is greater than income, which means whatever they earn, they spend more. So in that case, what they will have negative savings. Negative savings means they need more money. So this more money is needed to function their activities. Sometimes this money is needed not only for consumption, probably it is needed for investments. Right? So what I am telling is, in the economy, there are various needs. What are these needs? Some people, they do some savings. Some people, they don't have savings. They need money or they need to borrow. Some people, they want to invest. They want to create more production. For that matter, they have to have invest more. So they need more money. So if you simply look at this idea in the economy, there are two segments basically. So this segment, you can call it a surplus segment. Surplus means they have savings. They have more money than what they consume. Or out of their income, they have a surplus. This segment, you may call it deficit sector, which means they have a shortage of funds. So in economy, we have these two segments, the surplus unit, the deficit unit. The surplus unit is having extra funds for savings. The deficit unit does not have extra funds. They need money. They borrow for their purposes, either for their consumption purposes or for their investment purposes. They borrow, right? So this is the scenario in the economy. Now, what happens in the economy when we have these two segments? I'll erase these because I need to write something else. Right. Now, we know from our discussion, there are two segments in the economy. The first one is the surplus unit. The second segment is the deficit units. So the surplus unit, there's no point, no meaning if they keep those money with them. If you keep your surplus or the savings with you, you don't get any return. Mind you, the value of money will erode over time, right? Your money value does not remain same. It will erode over time. So there's no point if you keep money with you. So surplus units, they will invest this money somewhere. I'll show where they can invest. The deficit units, they don't have funds. They want to have funds. So they are seeking for funds. So they are borrowing funds from others. From where do they borrow? There is a segment in the economy, the surplus units. The surplus units are generating surplus money. So deficit units are borrowing this money from the surplus units. Now, how this happens? This happens through the financial system. So that's why I call it here the institutional arrangement. So the institutional arrangement is the financial system. So surplus units are bringing money to the financial system. Deficit units are borrowing money from the financial system. In the financial system, again, there are two ways of doing this thing. One is basically through financial institutions. For example, if this surplus unit is going to a bank and deposit money, and the deficit sector is borrowing money from that bank, that is we call as the financial institutions involvement. We have specific terms for that in the next slide. And the other method is you can do it in financial markets. For example, these surplus units, they are not going to a bank. Instead, they are going to the market. For example, they go to the stock market and invest there. And the deficit sector is getting money from the stock market. So which means the financial market. So this institutional arrangement indicates surplus units or the savers are channeling funds to the deficit units or the borrowers through the financial system, either through financial institutions or financial markets. So as a result, the financial flows, finance in a financial system can be identified in two ways, right? Now, as I said, in the economy, there are savers. These savers are having savings, right? These savers are the lenders in the economy. So they lend excess money. Who are these savers? There could be households like you and me. There could be business firms, which means companies. There could be the government. They might also having savings, which is unusual. Usually governments are having deficits, but there could be some governments having savings, right? Or government institutions with savings. When I say government, here government institutions are also included. They might be having savings. And then foreigners. All these might be having a surplus. And as I said, there are deficit units in the economy. They have a shortage of funds. Who are the spenders? As I said, their spending is higher than their income. Borrowers. Who are these borrowers? Again, there could be business firms, companies, they are borrowing. The government is borrowing. That is very common. Households, they are also borrowing, like you and me. You go to the market or the financial institutions, you take a facility or a loan. Foreigners. So these are the deficit units. Now if you look at very carefully, surplus units can also be the deficit units. Think about our own case. Sometimes we save. So we are falling into this savers category. At the same time, we go to a bank and we borrow. Let's say housing loan. Then we become a borrower or spender. So the same person could be in either side. Okay. So those are the surplus and deficit units that we discussed earlier. And then I said they are coming to the financial system. How does they come to the financial system? So this entire part, we can call it the financial system. They are coming to the financial system in two ways. The first one I already mentioned to you, through financial institutions, or sometimes you call it financial intermediaries. For example, if a saver deposit funds in a bank is a financial institution. If the bank gives a loan to the deficit unit, a loan is coming through the financial intermediary. So channeling funds through the financial intermediary to the deficit sector, we call it indirect financing. Channeling funds through the intermediary, for example, through a bank, you can call it indirect financing. Sometimes we use the term financial intermediation. Financial intermediation, which means an intermediary is providing a service. In Sinhala, you call it mulya ataramadiya. නැත්නම් මූල්‍ය අතරමැදිකරණය. මූල්‍ය අතරමැදිකරණය සිද්ධ වෙන්නේ indirect finance තුලින්. නැත්නම් අපි කියනවා වක්‍ර මූල්‍යණය. Indirect finance. Indirect means there's no direct involvement between the surplus unit and the deficit units. They are meeting through an intermediary. As I said, the best example is a bank. A bank is taking deposits, giving loans. That is simply indirect financing happening through intermediation. Second method, as I said, without going through an intermediary, these surplus units can channel funds to the deficit units through the markets, FMs. So these markets are places where you can exchange funds. Places in the sense may not be a physical place, but it's a mechanism that you can exchange funds. For example, let's say this surplus unit, let's try to change the color. This surplus unit is buying equities or bonds. These are called as market instruments, capital market instruments, equities or bonds, without going through a bank. So when they buy equity or bonds, that has to be done through a financial market. From where do they buy? Through financial markets. These bonds and equities are issued by these deficit units because they need money. For example, the government needs money, the government issues bonds. A company needs money, a company issues securities, equity. So when they issue through the financial market, the surplus unit will buy. So in this case, the surplus unit and the deficit unit are meeting directly in the financial market. So that one you call it as direct financing. There you don't have intermediaries. There you don't have banks. There you don't have non-banks. There you don't have, let's say, insurance companies. There you don't have similar intermediaries. There you have markets. There you have exchanges. There you have market makers, market players, right? So simply what I want to mention you from this diagram. So this diagram is available in Mishkin's book. If you really need some, more understanding, more discussion, you can refer to the book. In a financial system, we identify two important financial flows. The first one is direct financing. Second one is indirect financing. Direct financing means through the markets. Indirect financing means through an intermediary, or you can call it a financial intermediation. Clear? Is anyone having any question here before I move to the next slide?
Excuse me, sir.
Yes.
Can you give me a brief idea about treasury bonds and securities?
Yes, treasury bonds, as I said, they are traded in the financial markets. Very simply, a treasury bond is a security issued by the government. Now, you saw in this diagram, the government is having a shortage of funds, remember? So if the government is having shortage of funds, how they can mobilize funds? They can issue bonds or bills. Treasury bond is a long-term instrument, bill is a short-term instrument. So a treasury bond is issued by the government to finance their deficit, right? There are various features of treasury bonds. I'll discuss them in upcoming sessions, but for the time being, let's say treasury bonds are issued by the government to raise money for the government. Bond is a long-term instrument. Equity means E. Sometimes we call them as equity, stocks, or shares. All are same meaning. Equity, stocks, shares. Those are issued by business firms. Now here we have seen business firms also need money. Remember here, they also need money. How do they can issue raise money? They can issue shares. Let's take an example. Let's say now let's take a Sri Lankan company as an example. Now, what is the best company in Sri Lanka, right? Based on share market performance right now, what is the best company? Hello?
John Case.
John Cales, exactly. In terms of market capitalization, that's the largest company. I think roughly 10% of the market capitalization is held by John Cales. That's the largest conglomerate in Sri Lanka. JKH. Do we have anyone working with JKH in these 100 students?
My sister has bought some shares.
From JKH. Okay.
Yes.
Someone working with JKH in any company under John Cales? No. Now, let's say this John Cales, now I think you are aware, they are into a very huge investment. Probably you may have seen the Cinnamon Life project in Beira Lake, where they built a massive compound with a shopping complex, with a hotel, with parking, with apartments, with entertainment areas, conference halls, a massive place near the Beira Lake. Probably you may have seen. Now, how do they finance this? Let's say they finance it maybe through bank loans, maybe their savings, and at the same time, that is an expansionary project. Expansion, the purpose of having this project is company is expanding. So if the company wants this expansion, if they don't want to borrow from a bank, if they don't have their own funds, what is the option for them? They can issue shares, equity. As someone already mentioned, probably your sister has bought shares means from JKH, maybe at their IPO. IPO means when they are issuing shares, or maybe from their share market.
Yeah.
So wherever you buy, which means you are basically supporting, financing the private firm. So in that sense, equity or shares are used by the private firms to raise money for their purposes, right? So that is the basic simple definition that I can give at this stage. Going forward, we will be discussing these instruments in detail. Okay. Any more questions before we move?
Thank you, sir.
Thank you. Let's move. Now, why a financial system is important? What is the role of the financial system? Now, financial systems are not a new concept, right? Even in the history, we have seen the financial sectors have been functioning. Even in the era of, the before Christ period, for example, during the 3rd century, or the 6th century actually, where we observe these philosophers like Socrates, Aristotle, Plato, 2000, 500 years ago, we see the banking systems and financial systems have been operating in those communities. And also, gradually, they have been evolving. If you read the Buddhist history, you might see the banking industry, financial system was operating. If you read the Christian history or the Catholic history, you will see in particular countries like, Italy, Rome, Sicily, Greece, these type of, financial systems have been operating. If you read the Islamic history, you might observe in the Middle East and areas, these financial systems have been operating. So you may call them as pre-modern financial systems, right? So what I am telling, the financial system is not a new concept. They have been operating for 1,000 years. But today what we are talking about is a modern financial system. So the word modern financial system is important because, it is different from what we have observed in the past. A modern financial system. So why do we need to have a financial system in modern sense? It provides some various important services. Now this slide is important because in your exam papers, I have seen some questions related to this slide. So I put an asterisk here. Stop here because this slide is important because there are some questions, maybe 2 marks, 5 marks. There are some questions related to this, the role of the modern financial system. So modern financial system provides some various services. What are these services? I have listed down here and I have given some brief definition also. The first one is intermediation. Intermediation we already know, isn't it? Remember, this indirect financing in this chart is simply, this area, simply we have seen intermediation is happening. So what do you mean by intermediation? Transferring resources or funds from savers and borrowers. That intermediation is happening. There it happens through financial institutions, right? Which means credit provision. Also that intermediation, although we don't call it as intermediation, can happen in the financial market as well. Remember, in the financial market also, funds are provided through bonds or equities. So all in all, you may call it transferring of funds from surplus units to deficit units. So that is one of the important functions in modern financial systems. So if you look at the textbook of Mishkin, they have a detailed discussion on intermediation. Why intermediation is needed, what are the benefits of intermediation, what type of problems are resolved by intermediation. Because in the financial market, there are various problems. Problems like, adverse selection. Adverse selection means you do a wrong selection. Moral hazard. Moral hazard means the adversity compounds. People or every people will do the same, very simply. So these issues are basically addressed through the intermediation. When you have a bank or a financial intermediary or even a market, the information is going or coming through these markets and intermediaries. So you can identify, proper financial products. And as a result, you will be able to resolve some of these problems in the financial market. So that is one very important role played by the modern financial system, intermediation. Second, value exchange. Value exchange means you can do payments. You can make payments. For example, you can, using cash, you can buy something. By giving a check, you can exchange any good or a service. You can transfer money from, let's say, from Sri Lanka to somewhere else. You can buy a treasury bill or a treasury bond or an equity, and you can pay for that. When you buy that security, you need to transfer the ownership of that security, which means if you are buying a treasury bill, you should get your treasury bill into your account. You should pay in cash. So all these are coming under the payments and settlements, which means paying. Settlement means transferring the security and paying for that. So this entire process we call as the value exchange. Even buying a simple good or a service or buying a financial security, every time you need to make a payment and you need to settle it. That process, you call it value exchange. So that is another important area. Third one, liquidity, providing liquidity. Liquidity in finance, it has two meanings actually. So I'm just clarifying those two meanings here. The first meaning is liquidity means for money you call it liquidity, right? Broadly, for money you use the term liquidity. For example, central banks are providing liquidity to banks, which means central banks are providing money to the banks. So that is one meaning. Here, the liquidity means the ability to converting assets into cash without any loss or delay. That is also called as liquidity. So the financial system provides liquidity means it helps to exchange assets into cash. For example, now let's say if you take cash, currency, notes and coins, do you need to convert it? You don't need to. Why? It is in cash form. So there is no conversion is needed. But let's say you have a treasury bill Or you have gold with you, gold. If you want to get cash out of that, you have to convert it. So whenever you convert, there could be delays in converting, or there could be loss of value. Now, a treasury bill can be quickly converted to cash because everyone will demand. You can easily sell it. So your loss will be very minimal. Now imagine gold, you can't sell it so quickly, right? If you sell it very quickly, you might be having a loss. Further example, if you take a real estate, a house, can you sell it very quickly? No, it will take some time. Again, you will incur a loss if you sell it very quickly. So this liquidity is ranging from high liquidity to low liquidity assets. Cash is the most liquid. Real assets and similar things are the least liquid. So the financial system is helping us to convert these assets into cash and try to minimize the loss. Okay, that is the third function. Fourth function, price discovery. Price discovery means we are selling financial securities in the financial system. Through the selling process, buying process, we are able to discover prices. I hope you are familiar with this basic supply demand framework. Supply and demand framework. So in this supply demand framework, through the interactions of demand, through the interactions of the supply, you get an equilibrium price, E. So this equilibrium price is actually identified through the market forces, through the demand supply process. Even for a financial security, we have this mechanism. Demand for financial security, supply for financial security. Out of that, you are able to identify a price. You call it price discovery process. Next one, risk. Now, in finance, risk is inherent. Inherent means risk is everywhere. Now, risk is everywhere. No? Even in our life, the risk is there. We don't know. There could be various risks. The most significant risk now we have these days is what? Risk of having or getting infected with coronavirus. We don't know. There's a huge risk there. We are afraid of traveling. We are afraid of talking to people. We are afraid of interacting. We are afraid of doing economic activities. Everything is affected, even our classes. Why? There's a risk of contagions or getting infected. So even what I am telling is in our day-to-day life, risk is there. In finance, risk is much higher. In finance, risk means the probability of making losses. Risk means there is uncertainty that you can make losses. In the financial system, you can minimize the risk. How? You can price the risk. You can identify a risk. You can price it. And you can allocate, you can transfer the risk through various mechanisms. Right? How do you price the risk? If a particular security has a high risk, you expect a higher price. If a particular security is having a lower price, a risk, you are expecting a lower price. For example, for a bank deposit, you get a low return. Why? Risk is low. But for a share investment, you get a high return because risk is high. So by that way, in the financial system, you can price the risk and you can sell that risk. If you are selling the financial product to someone, you are basically transferring the risk to someone. So that is also provided or possible in the financial system. The last one, resolving information asymmetry problem. Now, in modern world, information is very key. Without having proper information, you can't make a decision. That is applicable for our day-to-day life also, right? If you don't have adequate, comprehensive information, you don't know how to make a decision. Your decision making is affected. Similarly, in the financial system also, you need to have proper information to make a proper decision. Asymmetry means there is a gap between the information. The distribution of information is not symmetric. Some might be having very good information or high level of information. Some might be having less amount of information. So those two have different sets of information. So when you have information difference, what can be done? You can do a thing called, arbitrage. Arbitrage means you can gain out of the differences in information by selling in different markets when there is a gap. Now in finance, we are always encouraging a reduced arbitrage, which means to resolve information because that will help to competitively price the financial instruments. If you have information gap, you might not be pricing the instrument properly. So to price the instrument properly, you should have proper information. So the financial system is resolving this asymmetry. Why? Financial intermediaries, different players, markets, they are generating information. They are collecting information. They are distributing information. So that helps to reduce the gap in information, right? So likewise, these 6 items, these 6 important facts are really helpful for us to understand the role of the modern financial system. Intermediation, value exchange, liquidity provision, price discovery, risk transferring, and resolving information asymmetry problem. So those are the key roles of the financial system. Why finance is important for the whole economy, broad economy? I already mentioned to you at the beginning, financial sector is the backbone of the economy, isn't it? I told you, financial system is the blood of the economy because it helps to activate the economic activities, right? Now, as a result, there is a clear relationship between the financial system and economic performance. Now, in this chart, I'm presenting you some evidence to prove that why the finance is important or financial system is important for the broader economy. Now, some people call it the relationship between finance and the economy as a chicken and egg problem. Chicken and egg problem means we don't know which one came first. I don't know any one of you, 100 people we have here, will be able to answer. Can someone answer? Who came first? Chicken or the egg? We don't know. Similarly, the relationship between the financial system and the economy is similar to chicken and problem because egg problem. We don't know which one came first or which one drives which one. We don't know whether the financial system is supporting the economy or economy is supporting the financial system. Can be both. You call it causality. But the point we want to make here is, in spite of the direction of the causality, we know there is a close positive relationship between the economy and the financial sector. As I said, here I have some evidence. So this is from a research paper where we have relationship between financial development and economic development. So they have used some ratios. External finance to GDP, which means this is the measure of financial development. On this axis, we have GDP relative to a worker. Right? Here we have total productivity, factor productivity. Again, it's a measure of economic development. So on this axis, we have economic development. This axis, we have financial development. So each dot in these two charts, here we have productivity. Again, as I said, it's measure of economic development. Here, financial development. So two charts, but the same message. So these dots are different countries. Now, when you plot these countries in a graph like this, you call it a scatter plot. Scatter means you have different observations scattered everywhere. And if you take a trend line, where you have this red line is the trend line, that trend line shows the direction. So in this chart, the red line or the trend line is positive. In both cases, you have a positive slope. Positive means there is a positive relationship between finance and growth, finance and economic development. There is a positive relationship. So that is the message. So in order to promote the economic activity, we should develop the financial system. We should expand the financial system. That is the message. So financial system is facilitating the allocation of resources, right? Now we know individual entrepreneurs, investors or borrowers, they don't have enough capital to undertake investments, right? If you are an individual person, if you want to do some investment, you may not have enough capital. Similarly, if you are an individual saver, and if you don't pool money means if you don't put it to the financial system, you won't be able to generate any return. So the financial system is facilitating this allocation and deployment of these financial resources. How it is done, or how does the financial system resolve this problem? They accumulate capital from small savers. Remember the surplus units? From the surplus units, they are accumulating the funds. And then they allocate funds for the usage. Remember, they give loans or invest in the deficit sector. This is surplus units, this is deficit unit. So which means allocation. Not only that, the financial system is monitoring whether these funds are allocated and used in an effective, productive way. So if I talk about the economic significance, all in all, the financial system is facilitating the allocation of resources in the economy. That's why you see this positive relationship. So the positive relationship is coming from effective allocation and deployment of financial resources. That is the point I want to make. So in the next slide, I'm talking about the financial system in Sri Lanka. And in this case, I'll be looking at the history of Sri Lankan financial system very briefly. History in the sense, I'm not going way back or far back to the Buddhist age or the age where we see this King Vijay came Sri Lanka. I'm not going that far. But simply what I'm talking here is I'm going back at least to the era of our, independence, where we gained independence around 1950s, 60s, that period. And then from early ages, since the independence, to the period of 1980s, this is an important area or period in Sri Lanka, what really has happened during that period. Because from 1950s to 1980s, our financial system was broadly, capturing or indicating some broad characteristics, similar characteristics. After 1980s, especially, I think probably you may have heard, I don't know whether someone of you have already born by that time, 1977, 40 years back, or actually 43 years back, the Sri Lankan economy adopted open economic policy, which means the economic activities were rather, open for export, imports, foreign activities, and broadly the liberalization has happened. So with that, our financial system was also liberalized to greater extent. A lot of activities have changed during that period. So I'll be looking at what are these changes happened during this period after the liberalization, and what were the main developments and what we can observe due to this change. Because we have to understand our financial system in that way, because the products and the markets and the institutions we have are related to the structure of our own financial system. Because as I said, the Sri Lankan financial system was having some different characteristics before 1977. After 77, after 80s, we see some changing characteristics. This has further changed actually since 2000s, where we observe a rapid change in technology, right? We see the technology is changing very fast. Even in Sri Lanka, even in the remote areas, we see the impact of technologies being felt, right? May not be very significant, but we know the technological transformation is impacting the lives of the people. So as a result, we will see how the financial sector has been evolved over the time, because that is needed. Now that will be a bit time-consuming discussion. We will look at some of the aspects in detail, and I think we are very close to 3 o'clock now. So which means we are completing our 2 hours in 5 minutes time. Probably you may have to switch into the next session as well. So I'm thinking of winding up my session here. So to conclude today's discussion, we actually at the very early stage, we just look at the financial system, we defined it, and we looked at the financial flows in detail in a financial system, because this is really important to understand the financial transactions. And also we looked at what are the key roles played by the financial system. And I mentioned this is a targeted area in the exam also. We see some questions. What is the role played by the financial system? What is the importance of intermediation? Why risk transformation is important? Things like that. Those questions are there. And also as a whole, economically, why the financial system is important? The economic significance on a broader scale, we also touched upon that. And I think with that we have some key or major understanding on the importance of the financial system as a whole. Right? So with that, I think starting from next week, we can discuss the financial system in Sri Lanka and the basic components. I think we will be able to start the next discussion also next week, because the balance part won't take much time, because I'll be going very fast this overview session in the balance part. So my request, since you have slides, since you know the references, if you have some time, please try to refer to these slides of the discussion, right? And we'll start our discussion next week at the same time, around 1 o'clock. And I think let's take a stop here. I have seen some questions here. Equity means capital. Yes, capital can be in any form, right? So equity is the main form where you raise capital. But in capital, there could be other items as well. For example, retained funds, accumulated earnings, likewise, undistributed profits, likewise. What is the connection between intermediary and market? Intermediary and market, they are related, because even the intermediaries, they do actions in the markets. So markets cannot function without intermediary support. For example, financial market transactions are routed through a banking system, routed through a facilitator. So likewise, there is a relationship. So don't get misunderstood. There is no disconnection between the market and the intermediary. They are also playing a similar role. Okay, let's stop at this point. I'll see you next week at 1 p.m. on Saturday. Okay, thank you. Have a good weekend.